Folks, as you requested, that's right, this poll here, only 13 votes. I encourage you to give some more votes to this if you're interested. How often would you like to see videos unveiling my entire portfolio, as we're talking about the Robinhood and the M1 Finance? You guys voted once a month, so we're going to be doing that once a month, starting around really the start of each month, through the good, the bad, and let's be clear with each other, the ugly right now. I'm going to do this for you because I love being transparent. And if you love me being transparent, don't mind hitting that subscribe. Stick around, folks. I'll show you everything, okay? I'm an open book out here. I'm not hiding my investments like some of these cowards. Let's get into it. We're starting with the Robinhood Portfolio today, and we'll do a separate video for the M1 Finance Portfolio. So if you're excited for that, I hope you are. Stay tuned. That will be released likely tomorrow. So it's going to be the end of the month, obviously. We're recording this on the last trading day of the month, and I hope you're excited. Here's what we got. The Robinhood Portfolio right now valued at $41,892. Show you a little bit of a performance of what we've been going through lately. It's been a tough one. Today alone, we fell 3%. The last week, only down 1.79. We had a great day on Thursday, followed by a horrific day today, right? On the month, that's right, down 9.3. That one's hard to swallow. Down 9.3% just this month, or $4,300. On a 3-month basis, down 6.8, or $3,000. And on the year, we are down 6.5. Down nearly $3,000 just in the last year. It has been a rough year for us. And if we look all time, this portfolio was started in July of 2017, as you can see. Right now, unfortunately, we're only sitting up 40% all time, or $12,000. Honestly, in my perspective, I think that's plenty fine. We were up really high not too long ago, but this percentage is a little skewed, I will say that. We actually are up higher than this, but our cost basis did get messed up because Robinhood somehow can't transfer over cost basis when you transfer over positions. I did eliminate my stash account that I had, and I transferred all of those positions, the larger ones, into my Robinhood, and unfortunately that eliminated my cost basis for a lot of these companies. If you're interested in what those cost bases look like, you can look to older videos that I have showing off these portfolio prior to that transfer, and it'll show you the cost basis of some of these stocks. We're going to go into every single position, and I'll show you where we're at with these, okay? If you're interested in getting into Robinhood, obviously use my creator code in the description. You'll get a free stock, baby. Look at this. Both earn a free stock. That's what I'm talking about. Get involved. I can help you if you need me. Just send me an email. Shoot me a comment. I'll help you. We're starting off. We do have one long-term option set in play. We did just sell an option call yesterday. We played forward earnings yesterday, and we made a win, folks. We won. We thought the stock was going down on earnings, and it did. And we scored $40 of gains within a day, and we sold out of that and got out. This Stitch Fix call is a $25 strike price expiring in January of next year. So January of 2023. I plan on holding this for a while. Right now we are currently up on this option play, up $9 or 15%, but I plan on holding this one. I do think we'll see value increase as time goes because I think Stitch Fix could see a decent pop. We just need some positive news, and right now the market's not giving that to us. And you can see it. I did bring up the indices, so you can kind of see a comparison. So if you look on the year, we're underperforming the Dow Jones as well as the S&P 500, but we're a lot more tech heavy, so that's where you see that impact. But we're not as bad as the Nasdaq's been performing, 11.6% down. We're only down 6. So again, we are quite heavy into. We got a lot of tech positions, so that's where we're hurting quite a bit. Now I do use a website called trackyourdividends.com. This is a great tool to help kind of calculate my yield, as well as yield on cost and potential future of annual income. Right now, this portfolio due to all of this decrease in share price, we're yielding 3.9%. That's incredible. I'll take a 4% yield any day, folks. Yield on cost at 5.5, and our annual income has now creeped up quite a bit. We've been buying a lot, up to $1,600 annually on this portfolio. One thing I'm really excited about, and I do show you the dividends every single month as well, so stick around for that. Let's get into these stocks now, okay? First off is Apple. Sadly one that, as you can see, it was modified by a transfer, so you can't see my share price. It's really unfortunate to not see the cost basis here, but we've got 27.6 shares. It makes up around 10% of the portfolio. Look, I'll just tell you, I was dirt cheap on these shares. We're talking about, somewhere around $40 a share. Was our cost basis 47 or something. We were very cheap on our Apple shares. We've been in for quite a while. I just wish it could reflect on this, but we've been performing really well in Apple. We're up well over 200% even with this recent dip. Facebook, been more of a stinker. No cost basis on this because we also transfer on this. 13.4 shares though. My cost basis was right around 160 prior to this transfer. So all things considered, we are up around $40 per share right now, given a good pop yesterday in the share price, making up around 6.5% of our portfolio at the moment. So it's been okay for us, but not on a long-term basis. But I do think over the long term, I really like Facebook as a position. That's right, folks. Microsoft, finally a position that I can show you a cost basis on. $103.61 per share. 4.6 shares of Microsoft. You can see how the gains have been significant here. Up $805 or 168%. I love that one. It's been a great one for me. AMD doesn't give me a cost basis because this one I only have one share of, and I did transfer this share over. But it was cheap cost basis, folks. Let me just tell you, this has been a position that's been stinking though lately. I mean, stinking. But I can't remember where we bought this thing at when we bought it, but it was cheap. That's all I'm going to tell you, folks. That's all I'm going to tell you. And I plan on holding it. Then we have Disney. What a shocker. We have a cost basis on Disney. My average on Disney is $103.54. We were up quite a bit more prior to this. 7.67 shares. Up only $64 or 8%. So really been a stinker for us, unfortunately. But I do really like this stock long term, and I'm interested in buying more shares, and I certainly think I will. Carnival Cruise Lines is one that I transferred over as well. 28 shares on Carnival Cruise Lines. This is one I'm certainly down on in terms of a position because this has been just a garbage stock over the last year, as you can tell. My cost bases were somewhere in the low 20s, but we're not even there because the stock continues to fail. But I think there's a lot of demand for the product, and I think it'll be doing well. AbbVie just took a massive hit today. At one point was down 10+%, and you can see obviously they have the alert because of that. And I don't have a cost basis, but let me just tell you, we've made a lot of money on AbbVie. It's 5.85 shares, 2% of the portfolio. Cost basis on this one was right around $80 a share. So we've done pretty well. I had to make sure I bring the cup of water because all this talking, it gets to the throat after a while, folks. You got to lubricate the throat with a little water now and then. Lube it up. Then we have one that's been a stinker for us as well. Gilead Sciences, $63.62 a share as a cost basis, 9.3 shares, down $37 or 6.34%. Overall, if you look at the lifetime of this stock, we're technically up when you consider dividends. I have a big focus on dividends in this portfolio. So we're technically up, but, in terms of market gain, we're not. I still plan on holding that one. Why is it trickling off to the right? I just noticed that. Look at this. It's way off the chart. That's pretty wild. I don't know what's going on here. Ford Motor, no cost basis, unfortunately. I'll tell you my cost basis. Oh, yeah, it was right around $7 a share on Ford. It was a beauty, but I transferred over a couple shares, unfortunately. So you don't get to see that. But we have 88.7 shares. I love this one as a long-term hold. This stock is trading dirt cheap right now, folks. Then we have New York Community Bank. Really, this overall was one of my first positions in the entire portfolio. Right now, sitting at 34.4 shares, down $45 or 12%. We have earned more in terms of dividends than we've lost. As you can see here, some of our dividends around $5 every quarter, but given the lifetime of the stock, we're up a little bit, but not in terms of share price. So it's been a stinker. We've had look. There's a lot of stinkers right now. It's unfortunate to say. Charles Schwab. Now this cost basis, let me tell you, folks, this is not accurate. I did own TD Ameritrade prior to this, and for some reason, this is what it thought the cost basis was when it transferred my TD Ameritrade shares into Charles Schwab. So technically, according to this, I'm up 6,000% or $267, when really my cost basis was closer to $40 when you look at the TD shares. So I guess you can consider that where it was, but nothing crazy. Then we get into our retailers, and we start with Target. This one's been a very big winner for us, up pretty massively here, $915 or 125%. Cost basis at 101.41, 7.18 shares. This has been a big winner for us, Target. It's been a nice holding. Then Costco is one that I transferred over, which I'm plenty fine having in the portfolio. Only one share because that's all I had to transfer over because I had partials beyond that. But I love having this one. And Costco it's a mean holding. Okay, it's a mean one, Mr. Grinch. Kohl's following them. I like Kohl's quite a bit too. This has been a big winner. The cost basis yet again was modified. Unfortunately, our cost basis was right at $28 a share prior to this. 25.29 shares. We're up pretty big, and the talk is that they could get acquired around $69 a share. I think they're worth more than that, but I think Kohl's it's been a winner for me. It's gonna be a great winner in the future. Tapestry Brands. This one has seen quite a rough 3 months. The year, terrible as well. We get into a recessionary type environment, and this type of luxury stock doesn't perform necessarily as well because they carry luxury brands. But the cost base is still nice, 17.66%. We bought this during 2020. 23.23 shares. I'm up $354 or 86%, which is pretty nice. I'm very happy with Tapestry in that aspect. Stitch Fix. One of my biggest stinkers out there, cost basis of $19.63, 21 shares. I'm down $215 or 52%. This one has been a stinker, folks, and I'm trying to kind of hedge that with this options play. Hopefully see if we can gain at least 50 of that back there, and we hold on long term and see what happens. After Stitch Fix, we have the last of our retailers, which is Home Depot. Yet again, one that I've had pretty well since the dawn of the portfolio. Spilled the water everywhere. Don't mind me. It's just something we do sometimes. Let me get this little. Good thing I have this little towel right here. But we're sitting at $164.58 on our cost basis. One share, 1.04, just through dividend reinvestment. We do reinvest all dividends, folks. Total return up $142 or 82%. Not bad for having one share. Let me tell you, that's been a winner for us. Wish I had bought more, but I was poor back then, okay? Coca-Cola, following them, has been pretty nice for me. I can't lie to you. $45.56 is my cost basis. 7.68 shares, up $147 or 42%. Not bad out of Coca-Cola. It's been a good rock to the portfolio, no doubt. Then we get into Starbucks, more beverages, folks. This one has been falling quite a bit lately, but still up $61.36 a cost basis, 2.63 shares, up $35 or 22%. Nothing all that crazy for Starbucks at the moment. Then we get into iRobot. After them, iRobot has been one that I failed at quite a bit, right? Look, if you look at the last year, there was a lot of time to sell iRobot. I mean, we're talking big time. This thing was up $130 a share, and my cost base is at $52.38. I got greedy, and I held on, folks. I should have sold out, but I think we may see another run-up. It's pretty cyclical, as you can see here from the 5-year chart. We should see a run-up in the next year, and I might sell it off then. But we're down $15 or 3%. Not really anything significant there. Micron, $45.30 in the cost basis, 10 shares here, up 227 or 50%. I like that one. It's been a nice winner for me. Cisco, following them, $39.46 of cost basis, 5.5 shares, total return of $53 or 24%. I will take that any day of the week, folks. Any day, including Sunday. That's right. Garmin, following them, just 1.04 shares at $81.50, up $29 or 34%. Not too terrible. I mean, I'll take it given recent pullback. Analog Devices, chip maker here, $81.51 of cost basis, 1.03 share, up $75 or 89%. We'll take that as a win as well. It's been a big winner for us. We've had it since the dawn of the portfolio as well. HPQ, I certainly have loved this one as well. Cost basis at $19.95. Close to when I was born. Pretty close, folks. Cost basis at 15.9 shares, I should say. But I'm up $265 or 83%. This one's been a nice stock for me. I told you to buy it a long time ago. I hope you did. I really hope you did. Then Activision Blizzard follows out our stocks here almost. I mean, 65.25 in the cost basis, 3.2 shares, $35 up or 16%. I'm very excited about the Microsoft acquisition. As long as Congress actually cares about America, they'll pass that and we'll be good. Getting free money on the table. Then we get into our Reits, baby, real estate investment trust. We have a lot of real estate in this portfolio in varying degrees. We start off with Realty Income, the monthly dividend company, up $56.43 on cost basis, 25 shares, up $337 or 23%. So it's been all right, and obviously these are excluding dividends baked into that percentage, but it's been a good dividend payer in the meantime. Then we had the spinoff Orion Office REIT, the spinoff we got from Realty Income. So I don't have a cost basis on this one, but I have 2 shares based off of the 20 shares of Realty Income that I held. So that paid me 2 shares of that. So pretty exciting. Then we get into one of my biggest winners on the portfolio. Is going to be Iron Mountain. This one's been beautiful for us in terms of dollar gain here. $32.92 of cost basis, 35.8 shares. I'm up $746 or 63%. This is a stock I have for the dividend yield, okay? This is a stock yielding over 5%. And the dividends are massive on this one. This is one I can show you if I go down here. You can see the last dividend I got here was $21.95. I mean, it's nice. The dividend's been beautiful on Iron Mountain, and it's been doing both for me. It's been doing both. Then we have OHI. I've been buying pretty heavy into Omega Healthcare lately. Skilled nursing is not going anywhere. It's only going to be more utilized in the future, folks. Cost basis at $28.41, 44.8 shares. Down $107 or 8%. With dividends, we are up. As you can see, we've had some massive dividends with this company. We'll show you the history. Most recently, $24.47. This one pays a nice dividend every quarter. I love to see it. Then ABR, my biggest. This is the biggest winner, folks. Just kidding, not anymore. It was the biggest winner, but it's still beautiful. It's still beautiful. We've still bought pretty heavy lately. $10.71 a share. 100.5 shares, up $658 or 61% with another massive dividend winner. The last dividend paid $36. So every quarter I'm earning 2 shares. I love to see it, which means I earn even more dividends. So that's what I love about this, folks. That's what we're building here. Apple Hospitality just started paying 5 cents on the dividend again. I'm happy about this one. It's been a decent stock, only $14.25 a share. At 66 shares, up $227 or 24%, and now paying a nice dividend of 5 cents a share per month. So, not bad. Southerly Hotels has been a stinker. Cost basis at $2.17, down $53 or 9%. Nothing crazy, but we have 253 shares again. So this thing, I believe, has a decent future. And you saw it did pop up a little bit. If you look in the last 3 months, we saw a good recovery for a second there and then back down to the dumps. But this thing has not recovered to pre-pandemic levels nearly, and it hasn't gotten close. But if it does, folks, this is going to be great for us. Then we have ARI. This one's been a beautiful as one. Apollo Commercial Real Estate. $11.85 of cost basis here. 91 shares. Only up $17 or 1%, but this is also one that pays a massive dividend as well. Most recently, $31.10. Every quarter, we're getting 2 shares again. It's nice to see that with these stocks. It really is. Then we have Nrz New Residential Investment. Not a lot of market gain here. $10.11 a share. 47 shares, up $13 or 3%. Nice dividend on this one as well. $11.79 most recently. It pays a good dividend, so that's kind of why we have it. So we're still earning income despite the downturn in the market. I like to see it. Then Prospect Capital. Then we get into our ETFs following that. Prospect Capital has been nice for us. $6.03 on the cost basis. 49.6 shares. I'm up $83 or 27%. Pays monthly dividend of 6 cents a share. One that I like it quite a bit, folks. I do. Then we get into a real estate investment trust. Not really going to show you these as far as cost basis because I don't think it's quite as relevant. But we have JEPI, Premium Equity Fund from JP Morgan. 23.8 shares of that. SCHD, one of the best performing ETFs out there over the last 5 years. 27.18 shares there. SPHD, monthly dividend fund here. 11.17 shares. SPYG, SP 500, the growth fund, 5.69 shares. SPYD, SP 500 dividend fund, 12.16 shares. MGC, following them, then IBV. These were transferred over as well. KBWI is a monthly dividend fund as well, 65.38 shares. I will show you this one because this is one that we're very happy with how the dividends are really building up over time. Let's look at the history of this, and you can see where the dividends have kind of been snowballing, and this is one that I'm pretty happy with. Again, you look back just to let's say May of last year, right, or April of last year, $4.36 a share, or $4.36 was paid on that month, and this year's month paid $8.60. So we've doubled that dividend in the matter of a year through additional investing, but also just owning more shares. It's nice to see. KBWI, another monthly dividend fund, 51.64 shares. QILD, another monthly dividend fund, right? Covered call ETF here. 29.26 shares. USOI is an ETN actually. Credit Suisse ETN, 59.75 shares. Very fluctuating dividend, but it's been a nice winner for me so far. DIV, a monthly or super dividend fund, I should say, 11.89. DES, small cap dividend fund, 2.12 shares. SNSR is the Internet of Things Fund, 1.01 shares, nothing crazy, very tiny position there. Then we get into some different stocks. One of our big winners that's been tanking lately is NEO. You see our cost basis is $2.07 on NEO. This is legitimate. 25 shares of NEO, up 717%, or only $371 now. And you see this one's really tanked in the last year. I mean, this was a stock that was, $60 nearly. And we held on to it, and it's just been getting tanked. But, we're still up big. But we're back to where I sold my other 175 shares back when I owned it before. So that's okay. We still locked in a big gain. Penn National Gaming, stinker. My speculative stocks are being stinkers lately. Let me tell you. 5 shares of Penn National Gaming at $55.87 a share. Down $96 or 34%. This one I do believe in long term, but it's just been a stinker. Then we get into Watt, another stinker. Nrz, $2.33 a share, 111 shares. I'm down $146 or 56% on this one. This one's been a horrible stinker as well. My speculative stocks haven't been working out, folks. That's all I can tell you. It's not been a good market time for speculative stocks. Plug Power, that's right. I got back into this at $25.86 a share, 8 shares, but I am down $37 or 18%. Another stinker. My speculative stocks, folks. I'm struggling. Then my last one here is Age Beverage, which, let's see. I don't know how much longer this one's going to last. This one's not complacent anymore. We don't have a cost basis, unfortunately, but I'll just be clear with you. It was over $2 a share with this one. So this one is a nightmare for me, and I don't like to think about it. But eventually it's going to be off my hands because it's going to be delisted, I think. Potentially they get bought out. I don't know. It's a stinker, though. So that is the Robinhood portfolio. I hope you really had a good time watching this. If you did, don't forget to share a little bit of a like. We'll send the M1 Finance video out tomorrow, most likely. So keep an eye out. I hope you have a great day.